Yeah, and the reason why it's hot, Katie, take a listen to this. Revenue up 63% in the most recent period to $1.18 billion. Saw a decent performance here on the bottom line as well. And more importantly, the guidance for the current quarter, the full year, if you will. The idea here that some of those gains can continue. The shares, which had been up about 6% in the after hours trade, now almost unchanged. Gil Luria joins us right now, head of technology research at D.A. Davidson. And Gil, I don't think anyone came into this quarter not expecting that type of growth. The concern was that you have this type of growth, but you've had even more phenomenal growth in the company's multiples with regards to its stock valuation. And I'm wondering if you're comfortable with where those valuations sit based on what we know publicly.
Well, it's very hard to argue whether Palantir should trade at 85 times or 100 times or 70 times, right? All these numbers are completely disengaged from fundamentals. This really is about the fact that this company is doing so unbelievably well. This is by far the best software company, and they keep raising the bar for themselves at a level that nobody else is even close to. This is a company with a $4 billion run rate that's growing 63%. There's nothing even remotely close to that, which is how we got to the situation where valuations are at unprecedented levels, not just for them, but for any software company. And that seems to persist as long as they can continue to raise the bar. Let's not forget, that 63% is an acceleration from the 50% last quarter, which was faster than the quarter before that. They continue to accelerate. They're doing phenomenally well on both sides of the business, the government and the commercial. Yeah. And that doesn't seem to be slowing down.
Well, let's talk about that. And we should point out that Alex Karp was interviewed a little bit earlier today, and the idea that he says, in his words, we're in, quote, nosebleed zone. But I want to talk about the commercial side of the business, the government business, which, remember, when they went public, that was a big criticism that they were so heavily dependent on government contracts. That revenue was up 50%, but the commercial side of the business more than doubled in the most recent quarter alone. Do you think this becomes a company where we're going to be talking more about the commercial side of the business than the government?
Yes. Within a year or two, the commercial side is going to be bigger. What's happening is all these companies, all the companies in the world want to have an AI strategy, an AI product, deliver insights using artificial intelligence, and they have to cobble together different software solutions and then hire a third-party consultant and internal people in order to implement it. Palantir comes to those same companies and says, just give us the keys. We will give you an AI solution on the other side of that. We'll do all of the above. We'll bring the software we have, we'll implement it for you, we'll run it for you, and you will have an AI solution. And they've been able to deliver that customer by customer to an extent that they've now become the leading provider of AI solutions, and which is bringing them more customers, and they're expanding their relationship within the existing customers. And interestingly, they're the only company that's been able to execute that so well. That is why they have more than 50% operating margins on top of the 63% revenue growth.
It's interesting, though. I mean, when you think about the division between government work and the commercial business, I mean, you take a look at the government work in the U.S., it increased 52% in the third quarter. When you think about the business going forward, what do you think the breakdown between the two sides are in terms of which commands the lion's share?
Within a year or two, the commercial side will be bigger. That's just because it's doubling while the government side is growing 50%. Now, growing any government business 50% is also admirable. That has to do with an alignment of mission, an alignment with the fact that Palantir can develop tools with its software where the government used to develop its own software. Palantir is capable of doing bigger and bigger projects. But the one important thing to remember that's true across government and commercial is that Palantir's magic is that it can take disparate data from different sources and combine it in a safe, private way so it can be used for AI. That's valuable on the commercial side. It's that much more valuable on the government side. So the growth rates there are incredible. It's just that the growth rates on the commercial side are even more staggering.
And Gil, this isn't necessarily about their business, but when I think about Palantir, I think about its strong retail shareholder base. It's very popular among self-directed investors, and it has, I mean, Alex Karp himself, of course, has built a loyal following. And I wonder what that means for you as, you know, someone who's charged with covering and analyzing a stock, how you factor in sort of the people that hold it to that conversation, if at all.
You have to factor. Again, that's why we got to this valuation. This isn't a valuation institutional investors would be paying on their own. The reason we're at this level of valuation is because of how excited individual investors are. And they're excited not just because of the growth rate and the fact that they recognized all these good things well ahead of institutional investors. They're excited about the mission too. Alex Karp, Dr. Karp, is not afraid to say that he wants to make software to help defend Western civilization. That's something very few companies are willing to say, and that resonates very much with individual investors that are aligned with that type of mission. So you have the fundamental performance, you have the excellent growth rate, but you also have a mission that's drawing individual investors as well, which again is why valuation has very little to do with the actual free cash flow that the company's going to generate, and has a lot more to do with how many people want to own a piece of this business.